Okay, so guys, welcome back for another video. Today I will be taking you through some of the amendments and the tax amendments bills were tabled before Parliament already by the Minister of Finance, Planning and Economic Development. So I took a look at some of the amendments and I would like to give you some insights. You know, the lawyers always give us a lot of hard English. We cannot interpret easily some of the terminologies, like notwithstanding section 23A and wow, what is notwithstanding? It's difficult. So let me break them down for you. I'll basically talk about the amendment bills. We have basically 4 amendment bills. We have the Income Tax Amendment Bill 2023. When they are tabled to Parliament, there are always amendment bills before they are approved by Parliament, discussed and approved, then assented by the President, then they come into law. So they incorporate them to make an amendment act. So for now, they are still bills, and the next 2 weeks we will find out which bills will be approved by Parliament for after the discussion for enacting in the next financial year 2023-2024. And this affects all of us taxpayers. I know some people may think that for me I don't pay taxes, but the future, these are things for the future. We live for the future, we are not living for now. So some of the proposals made on the Income Tax Amendment Bill is that, one, they are proposing to tax all profits of participants of the CIS, collective investment schemes, like unit trusts. So basically, for example, if you save with Zeno Investments and they invest for you that money in a private equity or a regional equity fund, or a regional or in the stock exchange, some of they invest the money for you. They will there was no tax initially on the profits of collective investment schemes, like dividends paid, interest to the participants. So now what an investment scheme does is that, or a unit trust does that, they collect money like an insurance company. If you've heard of savings plans, you save for 5 years and then get back your money with interest. So that interest, for example, that interest is called a profit on a contribution. So if your contribution is more than 100 million, the law is proposing that you will be taxed 15% on the contribution and the profit, rather the contributions. Yes, so contributions mean that deposits with the investment scheme and also profits from that investment scheme. So think of it that when I deposit money with Jubilee Insurance for 5 years, I take out an insurance policy to save my money for 5 years, and of course I'm covered, maybe a life policy or policy covering in uncertainties against life. So that policy means that they will pay me at the end of the policy, let's say 5 years. But that contribution, they pay it back to me, my deposits, and then they pay back to me any profit I've generated, like interest from their investments. So that is going to be charged 15% if your contribution and that contribution includes profit and your deposits, your fixed deposits every month. So at the end of the policy, if you pay that money, for example, if you're earning that money from an insurance policy which you took out 5 years ago, you will be charged 15% withholding tax. guys, 15% if you earn more than 100 million, or if your contribution is more than 100 million, and 5% withholding tax if your contribution is less than what? Is less than 100 million. So this tax is seeking to discourage actually more contributions to collective investment schemes. And I think I came across information that it had been repealed. It had been taken out of the amendment bills, proposed amendment bills. But we have this month to find out which bills will be passed into law. And then secondly, there is a proposal to repeal Section 27A. Section 27A applies to initial allowances. A taxpayer initially was allowed to claim a deduction of 50% for items or costs they have incurred on investing in eligible property. Eligible property means that machinery, rather buildings or machinery which have been placed into use for the first time. So if for example an investor comes from abroad and invests in Uganda for the first time outside Kampala, let's say 50 kilometers out of Kampala, and that's what was initially the case, that when you invest outside Kampala, 50 kilometers outside the radius of 50 kilometers from Kampala, you would be allowed a deduction of 50% of initial allowance for the costs you have incurred in investing in an industrial building, meaning you construct an industry outside Kampala, 50 kilometers away from Kampala, you'd be allowed a deduction of 50%. So now the law proposes to eliminate initial allowance. So if initial allowance is removed from the law, it will mean that investors no longer recover their investments in time. If I invested 100 million shillings, Uganda shillings, I would not be allowed a deduction for that money. So it means that all this asset would be taken. It would be taken as an asset for depreciation. There is no 50% deduction. So it means that businesses would have high depreciation rates if they remove initial allowance, rather high depreciable allowances, and that would mean a lot of huge losses for investors, and it would take a very long period of time to recover their cost of investment. So guys, the proposed amendment is really challenging in terms of attracting new investors into the country, and our leaders need to think about it, because initial allowance was also encouraging investment in areas outside Kampala, in rural and semi-urban areas. So if this is repealed, then if Section 27A is repealed, then it would mean that we are not going to attract investors outside the radius of 50 kilometers from Kampala, and it would take a longer time for recovery of their investment. So many people would report losses in their businesses, and they would lean on the issue of repealing of the initial allowance deduction. So another pertinent point on income tax amendment bill is that there is a restriction they are proposing of carry forward losses. So carry forward losses mean that when your taxable income is less than your allowable expenses. You know, in the tax laws, there is what they call an allowable expense. That expense which you've incurred for generating the income uh, during the year of income, the income you've reported. So if you generate income from, say, rentals of 100 million, and you report that you incurred costs of maybe maintaining property, electricity, and all those kinds of costs of, let's say, 120 million, so it means that you have a loss of 20 million, and there is no charge on carry forward losses, so income tax is zero. So you'd carry forward the whole loss of 20 million shillings currently, perpetually, meaning for the unforeseeable future. You're always allowed to carry forward any loss from your business operations to the next financial year. So it means if next year you earn income, you first deduct the loss you carried from this year. So the proposed amendment is that they are proposing that two things. You are only allowed to carry forward a loss for 5 years. Yes, they restrict a carry forward loss to only 5 years. So full carry forward, let's say your loss is 100 million, you can carry it to the next year. You carry the next year's loss to another year for only 5 years. So when you go to the 6th year, let's say after 5 years, they restrict the loss to only 50%. So it means that every business that has incurred a loss for 5 years, and the law is not clear whether it is consecutively for 5 years. Sorry. The law is not clear whether it is consecutively for 5 years or it is only or it is just for any 5 years of business operation. And it's also not clear, the amendment is not clear whether it only applies to, sorry, the amendment is not clear whether it only applies to it applies retrospectively to when the business started, or when the business or when the law is enacted. So 50% carry forward loss is restricted from the 5th year. When you make a loss for 5 consecutive years, you're allowed to carry forward all the loss. But when you not consecutive years, for 5 years, the amendment bill proposes 5 years. So we don't know whether it is 5 consecutive years of making losses, or any 5 years the business has reported losses. Then the next year would be the one where the loss is restricted. So that is also yet to be clarified. So it is a pertinent issue, in that there are businesses which take substantially a very long period of time, not only 5 years. It is also not clear how the 5 years were determined. So businesses which carry forward losses for even 10 years, like if you invest in airline business, which we don't have investors currently in Uganda, private investors, you may not really reap very fast in such business. If you invest huge capital, let's say the petroleum sector, the oil and gas, for example, those entities may not recover their investment in time. There is a development phase and all those phases, which they always incur costs, but they do not earn any profit. So it is again biting on the side of it is again discouraging capital investments, huge capital investment in the country. And it is just like unit trusts, collective investment schemes, what we discussed earlier, that the 100 million you charged, if your contribution less than 100 million, you're charged 5% withholding tax. If your contribution is more than 100 million, you're charged 15% withholding tax. So So it is not clear how they determine the 100 million. There is no proper also explanation into that. So we need to, our leaders also need to think about that. And then there is also a proposed amendment of taxation of non-residents providing digital services. I know this might come as a surprise to you, but they are proposing to introduce a digital service tax (DST) on all providers, non-resident persons. Non-resident person means a company which is not having its registered operations here in Uganda. For example, Google and LinkedIn and Facebook and Twitter, TikTok, all those platforms we love to use, and very many Ugandans are now enjoying using these online platforms. So there is a amendment proposal to impose a 5% withholding tax on every non-resident person who derives income from digital services in Uganda. So it means that if Google, for example, always asks for subscription, if you want to buy storage space for your email, if you, for example, want to, there are some of these platforms which come and they ask you to do free trial, and then after 30 days then you subscribe. For example, even some of these video applications which edit videos, there is also Zoom. Yes, all those applications which ask you to subscribe to their services after a trial period, for example. So you are required as the taxpayer to withhold 5%. And it's not clear whether it is actually the user or it is the seller. So if Google is selling to me services, how does Google withhold 5%? Yes, Google may not withhold on their payment, so it means that it is me who is paying Google to withhold 5%, or there is a mechanism they will devise to recover this money. But that is again affecting most of our services which are going to be provided digitally, and our content which is going to really affect these services being offered to Ugandans. So the cost of these platforms may increase, and I do not know how it is going to be implemented. This law is going to be implemented. So they are proposing to tax digital services, including online advertisement services. They're also proposing to tax digital content services, including access and downloading digital content. So it means that if you're going to download any videos, maybe from YouTube, you may have to pay 5% withholding tax, and then to deduct 5% withholding tax. And then there is also online gaming. There's so many games, cloud storage services like provided by so many cloud storage companies. They are also proposing digital services derived through social media platforms. Like if you advertise on social media like Facebook and all those sponsored adverts, you will probably have to withhold 5% tax on all those payments. But to be honest, I don't even know how I pay Facebook. I don't even know how I pay YouTube. I don't even know. I just know that my data is going, and maybe that there is a way they are going to withhold this tax, or there is a way they are going to implement this tax. Also, there may be implementation challenges on the side of it. It's also not clear whether it will be accounted for by a non-resident person or it will be accounted for by a resident person making the payment. So I do not even know, like I said, how Facebook is paid. I do not even know how TikTok is paid by myself. So if I'm making the payment, I don't know which form of payment I'm making to these people. Yeah. So it is really trying to, all these laws coming up every financial year are trying to broaden the tax base and to only make the Ugandan taxpayer very, I don't know what to say, can't find the right word, milking the taxpayer. So because if you're going to tax digital service organizations like the Googles and everything else, these are things we use on a daily basis. Even the government would mean, it would mean that the government has to pay taxes to, and I don't even know why they what they want from really Facebook, because already the government blocked Facebook from 2021 general elections up to now. And again, when you want to, if they want to tax Facebook, I don't know how Facebook would cooperate, because Facebook is not allowed here in Uganda to provide its services. And there is also withholding tax on the purchase of an asset. So or if you purchase an asset from, let's say, a landlord here in Uganda, and you fail to withhold the tax, that means you are breaching the amendment. So the proposed amendment is associated with a person purchasing an asset situated in Uganda. If you're purchasing an asset in Uganda, let's say you're purchasing a car and everything else, an asset in Uganda, normally the Income Tax Act proposes a threshold of 1 million Uganda shillings. You buy anything above 1 million Uganda shillings, which is an asset, whether it is for business purposes or not, as long as it is not stock for your business. You know, businesses have stock, like Toyota has a stock of cars. So if Toyota buys, for example, a building, they're supposed to withhold 5% withholding tax on the gross amount of that payment. So there are some exclusions, of course. There is transfer between spouses, and then there is also a transfer between former spouses in a divorce settlement, for example, is also not supposed to be charged the 5% withholding tax. If for example there is a couple divorcing, they transfer assets between themselves, it's not considered as a purchase for purposes of withholding 5%. And somehow the law is trying to become favorable by reducing the withholding tax to 5%. Yeah, because most of the withholding tax rate for the previous years has been 6%. Yeah, for most of the transactions domestically. So there is also an exclusion that you cannot withhold this 5% tax on purchase of an asset on involuntary disposal, where the proceeds are reinvested in a like asset. For example, if government comes with a project of constructing a road across my land, and they withhold and they pay me, so it is involuntary disposal. I have disposed of my land for the government to construct a road along it, but I reinvest in a similar asset, meaning I reinvest in land in the nearby areas or any other area using that money. So that is not considered for withholding tax. So that person I am going to buy land from will not withhold tax from me, because initially I was forced to dispose of my similar asset. So there is also so many proposals on withholding tax on 5%, but there are some exclusions, as I have mentioned: transfers between spouses, and also between former spouses in the divorce settlement. There is also involuntary disposal, where it is reinvested in a like asset. Then there is also sale of investment of a venture capital fund. Yes. So if a venture capitalist, like those companies which always invest in other companies, they can say that they can give you capital and then they take over some shares in your business. So those venture capitalists are not also going to be taxed on the disposal of their investment, where at least 50% of their proceeds are reinvested. So those venture capitalists also can dispose of their investment. If they invest in your business, for example, and they take over some shares, then they sell those shares, they are also required to reinvest more than at least 50% of those shares within Uganda, so that they are not taxed 5% withholding tax. So there is also transfers of assets of the deceased estates. Those people who die and their assets are maybe transferred to their children and what. So those are also not going to be taxed 5%. Without those exclusions, guys, 5% applies on every asset you purchase. You purchase an asset from someone, you withhold 5%. Well, it's just a proposed amendment. We will know in the next what? In the next 2 weeks. There is also a removal of a gain on the capital gains. Yes. Now, initially, what used to happen is that there was what we call capital gains tax. When you sell a business asset, and then you say initially you bought that asset at 50 million, and then you depreciate it for 5 years. Let's say the written down value for tax purposes is 30 million. So when you sell that asset out, and in your books it is 30 million, so when you sell it at 40 million, that gain of 10 million was charged 30% tax. So there was a capital gain of 30% on all disposals of business assets. So the government proposes to remove that gain on income tax on income of business assets. So they are removing the gain portion, and they want to charge they want a withholding tax of 5% on sale of all business assets. Yes. And also not to allow losses, allowable loss deductions for those assets. So it is a very unfavorable proposed amendment, in that what happens that now you sell your business asset and you're deriving some losses from the sale of that asset. For example, you repair your property and then you sell it, and then the repair costs are not allowed to be deducted from your income. Yes. So it is a bit unfavorable that capital gains are not they are planning to remove capital gains from the sale of business assets, but rather to charge withholding tax on the entire proceeds of the business asset, and not to allow any deduction for any losses on the sale of that asset. Yes, because by the time I sell that asset, it means it has not been very beneficial to me. So when I sell it at a bare minimum, and I have incurred some losses, maybe of brokers and all that, I'm not allowed to deduct that portion. Yes, I believe that law is also not very favorable to people who intend to dispose of their business assets. And even companies, some companies come to Uganda, and at the end of their at the end of their trading period, or those implementing projects, they want to dispose of their business assets. So it will not be favorable for those companies as well to be able to dispose of their assets, because there is no, they don't charge the gain, but rather they charge you on the entire asset. I know the rate is 5%, yes, but the previous chargeable gain of the previous charge on the gain was 30%, but the gain wouldn't be that much like the cost of the asset. So it is also one of the areas where, so it means you're earning only 95% on the sale of your asset. 5% is for the government. So it's a difficult one for the taxpayer. There is also section 89 GC, which talks about deduction of withholding tax on under the Petroleum Act. It talks about intangible assets acquired by a licensee under the Petroleum Act. The licensee is any company which has signed a petroleum sharing agreement with the government. For example, those engaged in the petroleum operations at the Albertine region. So if the licensee acquires an intangible asset, the proposed amendment that it will be treated under section 31, which says that intangible assets are amortized based on their useful life or depreciated, but rather they call it amortization for their use. They are amortized over their useful life. Now, initially there was a clause that they are amortized or amortized over 6 years. So the 6 years amortization of intangible assets is being proposed to be removed. So now intangible assets for the licensees are being proposed to be treated under section 31, whereby they are amortized. Section 31 of the Income Tax Act, they are amortized over their useful lives. And then a person also is required. Another proposed amendment is that a person is required to withhold 15% on 15% withholding tax on winnings of betting. Yes. So whenever you go to bet and you win, there is a withholding tax of 15%, and that is paid after every month. I believe every week actually. Betting companies pay withholding tax to the URA. So now the proposed amendment is that they are going to remove withholding tax on gaming activities, because initially it was winnings from betting and gaming. Gaming means that amounts staked on things like lotteries, and then slot machines. Yes. So those gaming activities are the ones they are proposing to remove withholding tax from them. We believe that the challenges have been that have occurred in the past of implementing withholding on gaming activities is that most of the people who win on those lotteries and those cards they play and those slot machines, most of the people do put back all their incomes into the game, or a significant portion of their income into the game. So if someone had a winning of 100 million, let's say from a lottery, they would most times stay there and invest back all their earnings. So it was difficult to implement for the gaming bodies. Yes. So now there's a proposal to remove withholding tax of 15% on gaming, but 15% stays on winnings from betting. So they are proposing on the gaming side, the tax rate is being proposed. Is proposed to increase. There is a proposal to increase the tax rate from 20% to 30% of the total amount of money staked less the winnings from a gaming activity. So it means that companies which initially the companies used to withhold 15% on winnings, and then at the end of the financial year they also file income tax of 20% of their stakes. You know how betting companies are charged, or gaming companies are charged, is that when someone stakes 50,000 and they don't win, so that 50,000 is charged tax of 30%. That is the proposal. Yes. So if someone stakes 50,000 and they win 20,000, for example, because there are some people who lose and maybe withdraw their money when the gaming activity is still going on. Let's say they win 20,000, so that difference you earned, 50,000 minus 20,000, is charged 30% tax. So the gaming tax rate has been revised from 20% to 30% of the stake less the winnings from the gaming activity under the Lotteries and Gaming Board Act, yes, 2023. So it is all these amendments to the Income Tax Act are really things we need to think about, and our leaders want to widen the tax base, guys, but thinking along critically, restriction of carry forward losses, withholding tax on the sale of business assets, and not on the capital gains, and then taxation of digital services, online platforms like Facebook, YouTube, WhatsApp, and all those people derive income from digital services, and then withholding tax on betting is maintained, and increasing the tax rate on gaming activities from 20 to 30%, and the taxation of profits of collective investment schemes, repealing section 27A to remove initial allowance. Guys, we are in for it, eh? So we have to be aware of the areas, of the loopholes of the law as well, and I will prepare a video one of these days on the areas where you can take advantage of the tax law, tax planning, not to evade taxes, but areas of tax avoidance. Yes, areas where you can do tax planning for your business and not lose so much in some areas where you're also supposed to be entitled to benefiting or claiming some of your expenses in business. So guys, thank you for watching, and this was the session for Income Tax Amendment Bill 2023. I will prepare one also for the VAT Amendment Bill 2023. Then we see which are the areas. Also the Excise Duty Amendment Bill 2023 and the Tax Procedures Code Act. There are some pertinent issues on the administration of the tax laws, the implementation. Yes, what are the areas they are proposing to change? Thank you for watching, and share this video. Thank you. Bye. I will sign out.